Good morning. This morning we're just going to be doing some simple trading analysis. How to understand the trend and equally take your trades within the supply and demand levels. So first, I love working with a line chart. Let me first hide the indicators on the charts. Then we switch back to our line charts. So first we take our top-down analysis so we can be able to get our key levels and most recent high and low equally get our support and resistance to use. So to do that, we'll go to the daily charts. I love for using the daily charts. Sorry, let me do away with all the drawings. So first, we take the most recent high and the most recent low on the 1 hour chart. Okay, so let me zoom it in a bit so we can be able to get clearly what we are doing. So using the horizontals, okay, we have it here already. Cancel this. Okay, taking the horizontal, this is our most recent high in the one daily chart, and we equally take the most recent low. So after this, we get a very important key level on the daily. This is very important because it will help us in when during entry and exit. That can help us a lot. So let's see a key level here in the daily. So this is a key level. Why is this a key level? Because we have price. We check that level either as support or resistance at least 2 times. You can see this is 1, this is 2, and this is 3, and equally 4. You get? So this is a good key level to use. So we navigate down to the 4-hour chart. Let's get the 4-hour chart. Yeah, this is a 4-hour chart. So we can equally decide to take our most recent high in the 4-hour. This is our most recent high and our most recent low. All these points will help us and our most recent low. So this is our most recent high, most recent low. Let's see if we can get a key level in the 4-hour too. Yeah, this is a key level. You can see we have the first touch, second touch, and the third touch. This is equally a very good key level in the 4-hour. So you should always expect price to respect that key level, to respect every key level. So if the price break out, we take advantage of it as well. So all these levels I'm drawing out are very significant. And let's navigate down to 1 hour. That will be the final time frame we're going to be using for this analysis. The 1 hour. Okay. So you can see there will be no need to, for this 1 hour, there will be no need for to get the most recent high because we have previously in the 4-hour chart, the most recent has corresponded with the one in the 1 hour. So we can just decide to get the most recent low on this 1 hour time frame, and this is it here. And so we get it. So the next thing is to move to the 1 minute time frame where I usually take my entries because this strategy is more of a scalping in gold. You know how volatile gold is. So I love trading gold. I love trading gold. So let's switch back to our candles, and I love to work with the simple moving average. That's the 9 and 21 moving averages. I love them. So the next thing is to first check for this strategy, first check what is the current trend. So clearly, for the experienced trader, you wouldn't need to do all this. By just viewing the chart, you can know what trend it is. So sorry, let me get this. So yeah, so remove this. Okay, so this is clearly a downtrend. As you can see, or what the structure is: lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So when the market is forming higher high, higher low, higher high, higher low, you obviously see that the market is uptrend. But when it's making lower high, lower low, lower high, lower low, then it is clearly a downtrend. So now we have the charts set. I am sure you love how a sexy chart is looking. Next is to wait patiently, because we have rules when trading this strategy. One, the trader must be extremely patient and wait. Sit on your hands. You have to sit on your hands to wait for an A grade signal. I only take A grade signals because I value my resources. I wouldn't want to see it waste. So you wait for A signal and wait for the market to retrace to a key level. So these are the rules. You don't trade against the trend. Yeah, you don't trade against the trend. You have to wait for a key signal, grade A signal. That's wait for the market to retrace back to a key level, or I call it a resistance level. You can say it's resistance level as well. Then since we are observing a downtrend, and thirdly, that's the third confluence, the simple moving average, the smaller period 9 must be below the 21 simple moving average. A candle must close below the simple moving average for you to take a signal. So as you can see, let me, because time may not permit, this is clearly an entry here. This is clearly an entry. Let me use this tool. So this is clearly would have been an entry for me. This or the next candle here would have been a clear signal, is entry, sell entry for me. So if you, sorry, this is what I want to use. Yes.